everyone. Thank you for joining us for this month's market update. I'm joined today by Casey Lowe, Senior Consultant at Frontier Advisors, Capital Markets and Asset Allocation Team. Hi, Casey.
Hi, Shahana.
Now, there is a lot, of course, happening in global markets, but we're interested today in getting your thoughts about inflation. Now, inflation, of course, continues to be an important challenge for policymakers globally, and monetary policy decisions are being closely watched. So can you please talk us through some of the main central bank announcements we've seen in recent weeks?
Of course. So maybe starting off with the most important central bank in the world, the US Federal Reserve. So in light of slowing inflation in the US, and also that they've had recent concerns over the banking system, which we spoke about last month, the US Federal Reserve only increased their cash rate by 0.25%, so a smaller amount than what they've done in the previous months, which means that the US cash rate is now in the range of 4.75 to 5%. In terms of the other central banks, when we turn to Europe, the Bank of England also increased their policy rate by 0.25%, but the European Central Bank increased theirs by a bit larger of an amount, so 0.5% there. And the reasoning behind that is economic growth in Europe has been more positive than what was been expected, but also because inflation remains persistently high there, and it hasn't really quite turned the corner in Europe. Closer to home, the Reserve Bank of New Zealand also increased their cash rate by 0.5%. So their cash rate is at 4.75%, so meaningfully higher than what we have in Australia. In terms of what's happening in our domestic market, the Reserve Bank of Australia has broken from the trend of the other central banks and actually have taken a pause in their most recent meeting. So in their April meeting, they left the cash rate on hold at 3.6%. The key reason behind this pause, which we've discussed before in previous videos, is that monetary policy, in terms of the impact, takes time to come through to the economy. There's a lagged impact, and the Reserve Bank of Australia wanted to take a pause now just to assess the impact on the economy. But having said that, the RBA Governor, Philip Lowe, have also mentioned that even though they've taken a pause at this meeting, further rate hikes may still be required because there's still a lot of uncertainties around where inflation is heading, even though it appears to have peaked. And that's because the labor market is still quite strong. So that could mean that inflation takes a lot longer to come down. But having said that, we are seeing the impact of higher rates come through in terms of household spending starting to come up. And then in terms of market expectations on cash rates, so the market is no longer expecting any further rate hike from the Reserve Bank of Australia. In fact, the market expecting the cash rate to cut towards around 3.4% by the calendar year end. So that's something interesting to watch going forward.
Now, you've mentioned, Casey, that interest rates have risen globally, but also very significantly here in Australia. Now, how would you say the Australian housing market is responding to very high interest rates?
Yes, so the housing market is one of the areas where it gets directly impacted by higher cash rates or higher interest rates, particularly through higher costs of mortgages for households. So over the last 12 months or so, we've seen house prices or the housing market slow down considerably. But surprisingly, in the latest data for the month of March, we've seen house prices actually increase slightly. So 0.8% increase over the month, so a very small increase, but it's still the first increase we've seen since April of last year. Now, most still don't expect this to be a turning point in the housing market just because we haven't yet seen a full impact of higher interest rates come through yet. But then, one of the reasons why we've seen this increase is maybe because of the number of advertised listings of homes, which over recent months have been at very low levels across the major cities. So that's potentially one of the reasons for providing support to house prices.
Now, it will be very interesting to see how house prices continue to adjust to interest rates, particularly as we're about to see a very large share of fixed rate mortgages roll over to variable rates later this year. Thank you very much, Casey, for your analysis, and we look forward to you sharing your insights again with us. And thank you very much for watching this month's Market Update.